As we begin the trading week, futures are pointing to a lower open across the board. The worst of the pain is being felt in the NASDAQ. It is on track to drop over 0.5%. The NASDAQ tumbled 2.5% in a late sell-off Friday. Stocks like Netflix, Facebook, and Twitter were hit the hardest, along with biotech shares. Let's get the latest from the trading floor. Allison Kosik is live at the New York Stock Exchange with more on the losses we are expecting today. And Allison, what happened?
Yeah, I mean, it's hard to believe. You look at what happened on Friday. You know, the Dow and the S&P 500, during the session, they touched all-time highs, but that was history once the closing bell rang. You know, the main reason we're seeing this sell-off is that weakness in the tech shares that you mentioned, along with Netflix, Facebook, and Twitter. We also saw losses in Amazon, Microsoft, and Cisco Systems as well. Now, analysts say that's because some of these shares, they've had big run-ups over the past several months, and investors aren't sure at this point if that run-up is justified, especially since we have corporate earnings season kicking off this week, and investors really want to see some hard numbers before they go ahead and continue to pump these stocks up. There's also already a sense that many earnings might not live up to the valuations, but this weakness may just be temporary. A CNN Money Strategist survey shows that most actually expect tech shares to be the best performers this year, while utilities are expected to lag. Maggie?
Well, we'll see. It certainly doesn't feel that way today, does it? While tech shares have sort of been taking a beating, Allison, at least last week there was one bright spot, wasn't there? Grubhub. It had an impressive public debut on what was a very tough day.
Yes, this is the online delivery service Grubhub making its New York Stock Exchange debut on Friday. Shares closed higher by 30%. And funny enough, the gains actually would have been bigger. Grubhub was up 50% at one point, if not for that broader tech sell-off. Now, I had a chance to talk with the company's CEO, Matt Maloney, a bit after shares began trading. He explains how Grubhub makes money, along with the benefit to restaurant owners and customers.
Online and mobile food ordering service in the country. We processed over $1 billion in food sales for mom and pop restaurants in over 600 cities across the country. We make it very easy and also free for diners to place online and mobile orders, and then we transmit those orders to restaurants, and the restaurants pay us a commission on every order that we bring to them. So these are small business owners. They're looking to build their business, and that's what Grubhub brings. A very low risk, high reward marketing opportunity to build their takeout business, which is the most profitable business they run.
Now, what makes this debut most impressive is that the company had already raised its target range several times before ultimately pricing it at $26. It speaks to just how much investors are really hungry for these IPOs, especially ones like Grubhub that are already profitable. Maggie?
Already profitable. That's important, and it is a pretty resilient showing on, you know, when you have an IPO in those kind of circumstances, very easy to get swamped with the overall sentiment. So they did certainly show some resilience.